Welcome to today's Explainer. Okay, let's dive into this. Because today we are trying to make sense of one of the most insanely volatile trading sessions we've seen in recent memory. We're going to look at the raw data together to figure out exactly how a day that started with record-breaking promise ended in absolute, unexplained chaos. Because honestly, this is the real mystery of the hour, right? How exactly did a record-breaking morning turn into a brutal 500-point market bloodbath in literally 30 minutes? It is a stark, almost unbelievable contrast. I mean, we went from cheering fresh all-time highs to staring at a massive sea of red right before the closing bell. So, to understand what broke, we kind of have to look at the setup and see how the day actually kicked off. And the morning began with pure, unadulterated optimism. The Nifty briefly crossed that massive psychological milestone of 24,000, hitting an intraday high of 24,002. And, there were seemingly great reasons for this strength. We had some really positive news about Wipro securing AI dealer agreements, which essentially sent the entire IT pack soaring. At one point, Infosys was trading more than 5% higher. Combine all that with swirling rumors that the finance minister might be considering cuts to the long-term capital gains tax, and you've basically got a perfect recipe for a monster rally. It created this immense, almost bulletproof sense of security across the board. Let's just pause on this number for a second. $24,000. Because of all that morning positivity, traders were incredibly confident. The 24,000 call option had the absolute highest open interest on the board. People were, frankly, afraid to sell. Everyone thought the market was only going one way, and that was up. They were completely, woefully unprepared for the vicious turn that was about to happen. So, let's look at the timeline of how this actually fell apart. The clock struck 3 p.m., and the market just began this dramatic, violent drop. Between 3 o'clock and 3:10 p.m., we are talking just 2 5-minute candles here, the index fell nearly 300 points. It was sheer panic, a complete waterfall of selling. By 3:25 p.m., the Nifty had smashed right into the day's absolute low. Then, in the final 5 minutes of trading, we saw this bizarre 120-point dead cat bounce, because apparently the market just couldn't make up its mind. But the speed and ferocity of that initial drop, absolutely staggering. 500 points. That is the total devastating plunge from the intraday high of 24,002 straight down to the low. A 500-point intraday reversal is incredibly rare for our market, especially on a day with literally zero major catastrophic domestic news to trigger it. It completely wiped out the bulls who had confidently positioned themselves in the morning. Section 2, Sector Wreckage. Banks, IT, and Reliance lead the plunge. So the crucial point is, a 500-point drop doesn't just happen without the heavyweights breaking down. We talked about how great the IT sector was doing earlier, right? We'll just look at this reversal. Infosys, which was up over 5% earlier in the session, completely cratered, dropping nearly 4% from its daily high during that final half hour. And TCS, another absolute giant, fell from trading 2 to 3% higher all the way down into negative territory. That morning euphoria? It just rapidly decayed into aggressive, relentless selling pressure. Now, if we break down exactly which heavyweights dragged the indices down, the data is incredibly revealing. For the Nifty, just 2 stocks, HDFC Bank and Reliance, contributed to a massive 90-point fall all by themselves. But it gets worse. Look at the Bank Nifty. It suffered a severe 500-point hit, primarily driven by just HDFC Bank and ICICI Bank. When your absolute biggest constituents are bleeding out like this, the broader index has absolutely zero chance of holding up. And this brilliantly illustrates the sheer scale of the weakness in these specific names. Take HDFC Bank's collapse. Back in January, it was trading at highs well over 1,000. Today, it touched a low of 735. That means this massive banking giant is now just 10 points away from its 52-week low of 725. It broke major psychological support levels and is looking incredibly vulnerable right now. So the natural question everyone is asking is, why? Was the Iran issue to blame? You always hear these narratives floating around when the market suddenly crashes. People blame geopolitical tensions in Iran, or they talk about the MSCI rejig, where funds are supposedly rebalancing and dumping stocks. But you have to genuinely ask yourself, do those events truly justify liquidating a portfolio in a furious, panicked 5 to 10-minute window? The answer is almost certainly no, and here's the evidence. If the Iran issue was actually crashing the markets, you'd expect to see a widespread global sell-off. But the global market reality was the exact opposite. U.S. markets hit fresh all-time highs yesterday. Asian markets were actually trading higher today. European markets were slightly green, and U.S. futures remained positive during our crash. This completely debunks the global tension or standard profit booking excuses. I mean, who is booking profits when everyone is suddenly sitting on massive losses? No, this brutal sell-off was a distinctly local anomaly. Now, what's really interesting about this slide is the severe disconnect that happened in the final moments of the crash. We're calling it the 3:20 p.m. anomaly. Right around that time, the Nifty Spot Index, which is the cash market, broke aggressively below the 23,500 mark. But if you glanced over at the Nifty futures, they were stubbornly holding way above 23,700. This resulted in a massive 225-point premium. Now, a premium is simply an unusually large price gap where futures trade significantly higher than the underlying cash market index. Since we're entering a new monthly series, a premium of 50 to 100 points might be considered, somewhat normal. But 225 points, that is almost unheard of. It left traders completely clueless during the final 30 minutes of chaos, literally wondering if the cash market was broken or if the futures market was just completely mispriced.
Section 3. What happens next? Navigating the 5-week June series.
After a day of just pure, unadulterated volatility, we really have to zoom out and figure out what these dramatic moves mean for the broader market structure. When we look at key technical levels, last month's high was 24,600, but more importantly, the absolute low was 23,300. That 23,300 mark is now the critical support floor. For anyone holding long positions or managing a retail portfolio, this is the line in the sand you are desperately hoping will not be broken in the coming days, because we still have a very long 5-week series ahead of us. So here's what we're left with a massive 500-point intraday reversal dragging down our biggest market heavyweights and that bizarre 225-point futures premium signaling massive confusion across the board. Will that 23,300 support floor actually hold? Or is this unexplained late afternoon chaos just the beginning of a much larger breakdown? We will find out when the opening bell rings tomorrow. Thanks so much for joining me on this explainer. Keep your eyes on the data, and I'll catch you next time.